Good morning, everybody. This is Michael coming to you from GammaEdge on Thursday, October 24th with pre-market morning strategy and briefing session. Three pillars we'll cover here in the morning is sentiment, structure, and trend. Obviously, we'll start with the trend. We've been talking about this for the past few days that caution was warranted. This is ARCX. We continue to be below the moving averages with the bolded CT. We're now seeing a colored ribbon cross red below cyan, which is a bearish type look. And we had two linear down days. We had a linear down day, and kind of some consolidation and some waning of the selling a little bit towards the end of the day, and then we continue the linear down today. So we'll see how this continues to play out. It's going to take a significant shift in the overall trend for us to start to look for anything long. That doesn't mean we can't get a bounce in the market. I know a lot of people say, oh, you guys said everything was bearish, the trend was down, and then we get this massive bounce in the market. With an overall downtrend, you will have bounces that come back up, maybe towards 58.50, maybe towards 58.75. But we'll evaluate that trend via buyers and sellers via our MTM market trend model. So at the very least, we need to see some sort of stabilization. We need to see the bolded CT start crossing back above the moving averages. Again, these are just short term. And then now you have the colored ribbon, which is going to be that ceiling overhead that you're going to get through. So now we kind of set up for those prone to failure type bounces towards that colored ribbon. So we'll monitor that day over day and intraday. But as of now, significant selling the past few days. We've also saw that on the cumulative filter tick. There was institutional selling on Tuesday and Monday and now Wednesday. So that's just something to monitor as we're moving forward. We'll go ahead and jump right into it. SPXP, this is true delta zeros that's in the SPX game plan. We monitor this for a longer term trend. We are now breaking below those true delta zeros. So previous history has shown that if we stay below those and we start turning down, we could have some more weakness in the market. So we'll monitor that. Obviously, if you're in the bullish camp, you'd like to see us get back above those true delta zeros pretty quickly. If not, we could see some more market weakness. We'll jump right in the SPX P full complex here. All expiries turned on, put dominated above and below spot price. Again, we talked about the transition being very narrow the past few days. We've expanded that transition now. Again, that brings in uncertainty of the market. And obviously with the negative gamma and put dominated environment, we increased the volatility, as obviously we saw yesterday. Interestingly enough, we still do have PGEX up here at 5,900, and then we have INGEX down here at 5,750. That's pretty close to where we bounced yesterday, so that's really going to be that lower line, at least for me to watch. Larger area there. That's why I drew that gray box yesterday. It was a key gamma delta level and also a key price level that we had tested multiple times before. So transition within this overall transition on the all expiries can be a choppy area, almost to 58.50 on that top transition area. So again, that would be an area we watch for some sort of rejection or stalling to the upside. And then the downside 5,800 will continue to be a very important area to watch and stay above. Delta bounce for SPX is trended extremely bearish now. Left-hand plane today and into Friday still stays a weak bull, so the in-the-money calls are still holding on. But you see projection for Monday, Tuesday, and Wednesday of next week, we do turn to a strong bearish. That means these left-hand plane in-the-money calls give up, and we do not see any OTM call speculation, and the in-the-money puts in the right-hand plane take over also. So we'll continue to watch this and monitor this day over day, but just a degradation in the overall sentiment and structure pretty quickly for the days that we've had the sell-off. So again, not a crystal ball, but if this continues on this path and with the overall structure and positioning, we'll continue to see weakness here into next week, in the finish of this week and into next week. The GEX ratio, we saw continue to drop in the SPX. So we talked about that previously, that we saw a pull down with price staying sideways, and we actually saw a drop in price yesterday. So the confluence of the GEX ratio dropping. Also remember, this is short dated calls versus puts. The calls are on the upside and the puts are on the downside in the overall ratio. So once you get a total move down, That would be a drop in the overall ratio. Obviously, the calls are dropping, puts are increasing. So we'll continue to watch this. But we're pulling down towards that one level, which is usually a balance point between the calls and puts. So we'll see how this continues to play out. Previously, you've seen a significant drop, obviously, in spot price, and then we drop below 1, and we get to that kind of interesting area of 0.6 to 0.8 through our back testing that usually leads to some sort of response. So we'll continue to watch that. The dashboard for a day, just day over day. I encourage everybody to continue to look at this just from a visual point of view. You can just see the change in structure prior day to day, and then the change over here. So obviously our eye pulls to greens and reds pretty quickly, and you can just see the change in structure there. Net GEX went negative yesterday or for today. So a significant change there, and we see the GEX ratio drop. And then you see the transitions continue to drop. When you see transitions continue to drop, there's only one way that can occur. That is put speculation below us and OTM call speculation waning or not being present. So the transition continues to drop day over day. And you can also plot this on your price charts, the transitions day over day. I know a few people here plotted those and posted those, which is a great visual to see the transition drop day over day also. The SPX P0 DTE, we've drawn the range, Drunken Sailor range here, 5760 to up towards 5850. So really those key gamma or key delta levels and key price levels we talked about yesterday. We saw the bounce from 5760-ish. We do have index at 5780, so at the least we need to stay above that. If we get below index, we're in that much more negative gamma environment, which would lead to most likely more weakness and push down to the downside towards 5750. And then staying above 5800 obviously is a key line in the sand that I'm going to watch throughout the day. And then we have narrow transition here on 0 DTE, so up towards 5820, 5825. Obviously, we need to see significant vol M positive slopes with the call and puts for us to have any chance to drive higher towards this COI level of 5850 or get above this PGEX level of 5820. Significant amount of in-the-money puts overhead. And if price goes sideways to down, the charm in those puts will just continue to expand and grow very rapidly. So the balloon above us will continue to get much larger, which will be a overhead weight or friction for us to move higher. SPX 0DT dashboard for today, net stack command, you see that 5850 we just discussed in the money puts. That right-hand plane integral is almost 10 times the left-hand plane. Obviously, moneyness matters. So if price continues to move up and down the overall structure, this will change. But that integral is pretty massive to the upside at the moment. So overcoming that will take a massive amount of liquidity and OTM call speculation to push us up. So transitions here, Drunken Sailor, lower. Obviously, that leads to more weakness in the overall market. And then the other key levels here. The next stat command, we talked about that, the integrals. So we'll watch this automated net stat throughout the day and see if this changes and how the structure in this right-hand plane, left-hand plane integral. Obviously, that 5750 is important. The in-the-money calls here, 200,000. That's right where we bounced yesterday. Again, we use these as areas, or I use these as areas of importance, not exact numbers. So it could be 57, 55, but we just know that that key left-hand plane strike is where all those in-the-money calls are sitting for the day. GEX ratio for SPY, we actually saw, this is kind of the conundrum that we've kind of been discussing this morning. We saw the GEX ratio in SPY increase, which as we've talked about, the calls on the upside, puts on the downside. So there was some sort of short-dated calls going in, increasing this GEX ratio, or possibly the puts decreasing. So we saw a bounce in the GEX ratio with SPY. And as you'll see in the delta balance chart here, the SPY actually looks pretty strong. So what we've seen is the SPX was strong, the SPY was weak. We talked about being a hedging instrument for the SPX, and now we're seeing the SPX delta balance look weak, but the SPY delta balance looks strong. So we'll see how this all resolves itself. But just understanding the SPY actually looks pretty strong, but obviously that can change intraday here. So we'll see how that balance kind of all works itself out. Moving on to the Qs, we actually saw a bounce in the Qs towards that 460 level. pull down key kind of gamma or key delta level and price level. So a bounce in the GEX ratio here. So obviously short dated calls going into the Qs most likely, causing a bounce. But again, the overall structure and overall market trend model is going to be the largest weight on everything. So we're going to have to really overcome all that, even though we saw some positive developments in SPYs and Qs. So it's really, we have positive development in SPY and Q, we have negative developments in the SPX and trend. So really it's a mixed signal. So when we don't have all those signals aligned, for me, it's just a wait and see, and until everything kind of plays itself out, and not putting capital to work and at risk when I don't have a clear picture of what's going to occur in the overall market. SPX P plus 1 DT put dominated above and below spot price. Again, really no OTM call speculation to the upside, significant amount of in the money puts, narrow transition range, so really unambiguous there. We see 58, 57, 80 there. So plus 1 DT, if this continues, a significant expiry for Friday, 600,000 OI already. But just a large amount of in the money puts overhead that are going to be difficult to overcome. And the net snap command for plus 1 DT, we see those in the money puts at the same level, 58.50. We do see in the money calls at 57.25. We discussed 57.50, but almost 3 to 1 on the puts versus calls here. So again, just going to be a significant hurdle to overcome heading into Friday. And I think that's probably why we're seeing that overall weakness to Friday and then on into next week. So what's our thesis for today? SPX, I've drawn the drunken sailor range. I've drawn this narrow kind of intra range here. You'll notice it on the 0DT chart if you look. This is just an area of low exposure that I'm really going to kind of watch today from that 5800 to 5825. If we get in this overall range, we probably can get pushed around pretty rapidly, depending on what the 0DT positioning is. So I'll be watching the vol M command and the vol D command throughout the day. But overcoming and staying above 5800, I think, is just the first line that we have to get above, and then obviously above that I would look for 58.25, and then obviously we have net GEX here, negative GEX at 58.35, and then 58.50. My anticipation is that we're not going to go higher than 58.50 unless we get some significant structured sentiment change, news event. To the downside, I'm looking at this 57.50 again. It is pretty well entrenched below us for in the money calls still. So unless this really starts to change and give up, and we see negative slopes on vol M and targeting under 57.50 on the mass of volume, I'm not going to anticipate that we go below that. Again, that's my opinion. We definitely could go below it. Once we got through 5,800 yesterday, we saw those dealer adjustments and linear down, but then we had a pretty massive response, kind of a positive response off of that 57.50, 57.60 area. So overall, buyers either puts closing or buyers stepped in here, one or the other, but I'm going to continue to watch that area for a response. Now, if we start slicing through that and we get major dealer adjustment bars, then weakness down towards 57.25 and 5,700 is definitely on the table, but we're pretty entrenched below us for in the money calls at the moment. And then on Monday, Tuesday, Wednesday of next week, we could see that change on the projection of delta balance. But for today into Friday, I'm not anticipating us go below that. But again, these are all areas that can get violated pretty quickly. Delta's king. I know we talked about this last night on open mic a little bit, but Gamma and Vanna really do not come into play in charm whenever Delta, basically this is just total risk off. Dealers are getting back to flat or hedging at all costs. So Delta is just overrunning all the other Greeks. So make sure you understand that even though on the net stat command we have Charm, Vanna, and Gamma, when Delta's taking control and people are just selling at all costs. And then the other thing is we talked about last night, which I got some DMs. These levels matter, but they don't matter when Delta basically in the market is risk off and it's 1-to-1, and basically we're just getting out of positions no matter what. These levels really don't mean much because they're going to get violated pretty quickly. So I don't want anybody to look at 5,800 and say, oh, that has to hold. That is, a key level, and we back test it and it holds, but then we back test it again and it just completely loses it. And everybody says, oh, GammaEdge said that this was the most important level. It doesn't matter. When institutions want to get out of positions or market participants want to get out of positions and they hit the sell button, none of these levels matter. What really matters is when the overall market is trending, volatility is down, and then these key levels can be areas where you can trade off of and have a better risk reward. But when the market is risk off, these levels are going to get violated pretty quickly. I think the key, though, is when they start to get violated, that should be a clue to you that there's a change in overall sentiment and there's a change in structure. These levels are not holding. Market participants are just getting out of positions. So that means you should take notice. Obviously, the MTM has been showing that since really November or October 21st. We were risk off on the MTM. Back here, October 21st, we obviously lost the CT pretty quickly. It was linear down, and then we got below the colored ribbon. So if you're in any long positions, this is when you start to take positions off and reevaluate your overall portfolio. So anyway, hopefully that helps. Just wanted to give an overview of lots of things, what we're seeing into today, and how I'm going to be playing it. Less is more, I think, until we get some stabilization in the market. It's going to be very emotional at the open. People that weren't able to get out yesterday are probably going to open their accounts today and see that they were down pretty significantly. So there may be some selling at the open again, just for market participants overnight looking at portfolios and really not understanding what's going on. And then if volatility is up and we're in a negative gamma environment, it's going to be difficult to really trade also, especially for new traders. So zero DTE, I would say stay away from that if you're a new trader. It's very difficult to trade, and I would not want to put anybody in that position. So, all right, hopefully that's it. Sorry, long run for the